Hey, this is Jonathan Mickles with the Strategic Multifamily Investing Podcast. I always got strategic, I have to go back. This is Jonathan Mickles with the Strategic Multifamily Investing Podcast. There we go. And I have with me Miss Aileen Prak. How are you doing, Aileen?
I'm doing wonderful. How are you doing today, Jonathan?
Doing quite well. I took some time and did your podcast. I was nerve-wracked. I think that was my second podcast that I actually was being interviewed for. So, I like you, I'm probably better at asking the questions than being asking.
It's a
So
different dynamic.
it really is. I'm used to grilling people, but no, that this is not going to be a grilling session. I wanted to hear a little bit more about, I guess, your journey, and you're actually doing this with your husband. So did your husband, go to a seminar and then said, "Hey, Aileen, we're going to do this thing," or did you pull him in? How did you all get started? What came first, the chicken or the egg?
So it kind of organically came together, I would say. We kind of started with real estate, wanting to buy our first home. We wanted to do some type of house hacking. We were actually looking to do some type of buying a duplex, rent one out, live in the other side. And then we just kept getting bid. Like our bids wouldn't get accepted, and then we just kept getting bid out. And so it just never worked out in that sense. And then,
What
but
market are you? What market
and
are you?
we're in California.
Oh, wow. Oh, yeah.
Yeah.
California money, yeah. Uh-huh.
So it was really hard, especially, we were just newly married. And then he comes from Pennsylvania, and we wanted to start a life together. And our family does some real estate. So we knew that real estate is a good place to create passive income. And for us, we wanted to do something like that and be able to, you know, rent a side out and then live on the other side and build up some cash flow for ourselves. But like I said, it never worked out. And then it just so happened that like a single family home popped up, and, things happen for a reason. The cards were in our favor, and it just so happened that the whole process went smoothly. We didn't have to outbid with anybody or anything like that. And then it was just meant to be our house. So we ended up buying a single family home here in California. And since then, we were always looking for some type of um, investment from real estate standpoint to try to create more passive income for ourselves. And it just never worked out in California. The numbers, we wanted to do more cash flow, but over here in California, things appreciate much faster, and there's a lot of investors out here, and there's a lot of competition, and so it was really tough. So we never really did any like real estate investing in California ourselves. So we, looked out of state for a little bit, and then, we did a couple of single family homes out there, and then we came across
Okay.
multifamily.
So you mentioned that two things. You said we
Mhm.
did real estate out there. Was that back in your husband's home in Pennsylvania?
No,
Or
St. Louis.
oh, in St. Louis. Okay, cool.
Mhm.
In St. Louis.
Yes.
And another question in terms of, you said you guys had a family background pretty much in real estate. So was it both sides of the family who were doing maybe investing in real estate, or was it one or the other?
Yeah, so it's mostly my family.
Okay.
They do, yeah. So they were able to get like during the downturn in '08, they were
Yeah.
able to pick up a lot of good properties at that time. And so we always knew that it was a really great place to invest. And we didn't really get super serious until probably at the end, like the middle of 2019 is when we actually started becoming really serious. We always knew it was a good place, and we were just looking and trying to find something. But it wasn't until 2019 when we were becoming really serious about wanting to find more investments and actually do this and gain more passive incomes for ourselves. And so we started reading. I came across a lot of podcasts and everything like that, and so I kept showing my husband like, hey, like, what do you think about this or this option or something like that? And we would just have kind of conversations. And the more conversations we had, he knew it was a great place to be in, but then at the same time, it wasn't like our focus. And
Right.
so
Because of the distance, or because of industry, or he didn't have enough information or knowledge, or what was the thing that kind of had him there? Because I think that there are a lot of couples that are maybe listening to this where their husband or wife or their spouse is, having challenges and trying to figure out, do we go forward or not? So what was the hurdle there?
Yeah, it was, we'd go the traditional path of wanting to invest in stocks and our 401ks and everything like that. And those were all great vehicles for us. And so that's what he was kind of more focused on and looking and creating wealth that way. And, but when I started finding more and more about real estate and what we can do with it, having that conversation with him, introducing him to more of the podcasts, more of the books. And then the more he kind of understood a little bit more and more about the tax benefits and everything like that with real estate. I think that was when the light bulb kind of went off. And then we kind of went full force with it. And we, experimented with, the single family homes. And then when we came across multifamily, we did our research, we did homework, we studied, and then we jumped in and did like passive investing ourselves in it to just test the waters. And so by doing that, it really got him more confident in what real estate can do. And then just the model itself has become so incredible for us, and that he has fallen in love with the whole overall model itself as well. And so like he loves looking at the numbers, loves looking at the deals now and everything like that. So it just evolved into some more of a passion for the both of us now. And so that's kind of how the conversation went and kind of like how we both are now doing real estate.
So then, question, you talked about you guys did some studying and whatever, and before you jumped in, who were you studying? Who were you listening to? Who were you reading?
So there was a lot of information out there. So we were listening to all the different podcasts that we could about real estate. We came across Joe Fairless's best ever book, and that one just laid out the foundation of multifamily syndications. And so, really getting into, and that was pretty much one of the first books that we read in multifamily. And then from there it just stemmed into like a whole bunch of more books after that, and then more and more podcasts. And then we listened to, like, I don't know, that first end of 2019 to 2020, we I don't know, we would read we would listen to so many different podcasts. Our commute to work was so long. We live in California, so
Yeah, so it's a
um
commute. Yeah.
yeah, so every commute we would always listen to podcasts. We would exchange different podcasts that we'd listen to, about
Are
different
there any
types
other
of.
suggestions of people that you think might be good to listen to? I mean, I got Joe Fairless, and
Mhm.
as
Yeah.
who else?
Joe Fairless, Whitney Sewell's podcast, and then also we listen to Michael Blanc's podcast. All of them are such great resources that we've utilized, and I mean, there's just a ton of them that are out there, and those are just to name a few that we've listened to. And then they all have a little different flair to their
Yep.
different podcasts.
Yep.
So you're getting a little bit of mindset from each of the different ones, but they're all really great resources.
Now, you mentioned also that your husband fell in love with the model. What model did you both, I guess, fall in love with? Which model was that?
It was definitely the multifamily syndication model.
Okay, got it.
Yeah.
All right, cool. So that's the multifamily syndication model. And you mentioned, a little bit about mindset. I mean, you all were listening to a lot of podcasts, you were gaining a lot of information, you know, where did your mindset come from? I mean, you obviously have seen some of the positive benefits because your family had picked up some real estate in St. Louis. You and your husband had reached out and done a couple yourselves out that way because things weren't well in California. You kept persevering past the obstacles that were in your way. You could have gone back to just do everything in the stock market. What was it that kind of helped you mindset wise to move in the shift?
So from the mindset standpoint, it was, we're very, I guess I would say like we're risk adverse types of people. And so what
Okay.
I found with stock market, there was too much volatility in that side of things. And so I was never comfortable with, going full in with the stock markets. We would do some stock markets just to diversify, but it was never a vehicle that I was like 100% confident in just because I didn't have control of what was going to happen with the stock market. I could invest one day and, make a great return. And then the next day something could have happened and then I could lose it all. And
Absolutely.
so, so personally, just from our personalities, it just didn't fit as well. We use it as to, have some stocks of our own to do a little bit of diversification. But
Right.
when we found multifamily and the model itself, the mindset shift and the model really fit our personalities because one, we're able to kind of control the value that we're creating in the multifamily space. It's not something that's left up to the market. It's not left up to, like what is being bought next door, like you can create forced appreciation in
That's exactly what I was
multifamily.
about to say. Yeah, you force appreciation because you guys actually do something. Now, the types of properties that you guys are going after from a syndication perspective, are you doing a lot of friends and family raising for the syndication? Or are you, this is pretty much primarily your own money and you guys are controlling most of the properties yourself?
Yeah, so we've just invested like passively ourselves so far. So it's all been our money, and then what we've been doing is just, sharing with our network, and we've started our own podcast as well to try to educate other people like who are who've never heard about multifamily, and showing them that there's a different way to invest, and there's not just the stock market because like ourselves, we never knew that you could invest in these larger apartment types.
Yeah.
And then when you're actually going a little bit more deeper into there, and the more and more you learn, it the vehicle is a really great place to be. And and we never hear about it before. And so by
Right.
us just doing this and studying ourselves and having these conversations, I think it helps kind of spread the word of there's other opportunities out there, other ways to diversify and create wealth.
Right. And I think that, and again, we're not financial advisors, we're not lawyers, we're not attorneys or anything like that. And you should really consult any of your financial advisors for any financial advice. However, a lot of people, what we've seen is that a lot of people have thought about, having more than 0% of their assets in real estate. Same thing with, some people doing the same thing with Bitcoin, or digital currency. They have more than 0%. You're not saying that, you have to have a certain percent in any of them, but, if you're in a situation where you're risk adverse and you need to learn a little bit more about, force and appreciation. When we say force appreciation, that means that you're actually doing something for the property. You're doing something for the neighborhood, meaning you're renovating the kitchens, you're changing out the flooring. Those things are considered forced depreciation, where the value of the asset or the multifamily apartment building actually gets better because you've done that. And so then my next question is, for some people like myself, I don't have any construction experience. Did you all have that as a background potentially in working with contractors? Because if you're forcing appreciation, that means that you're actually doing something to the property in order to improve it. Did you all have any of that background, or is that somebody that you brought on your team? How did that work out?
Yeah, so we don't have the construction background or anything like that, but it's a lot of, working with the smarter people around us and the people who have that really strong background, and really leveraging off of those people, and at the same time making sure that we're educated enough ourselves to understand the process and to know what we're getting into before doing something like that.
Okay. All right. Cool. Cool. So now what are you all focused on right now? I mean, you last time I checked, you were about 117, 118 podcasts so far.
We are, yes.
You
it's
guys
been
are
it's
huge. And how long did it take for you to do that many podcasts?
so we started back in this or September of 2020. And so
Wow,
yeah.
that's amazing. How did you get everybody to kind of say yes? I'll come on your podcast.
Well, that's what's kind of great about the real estate side of things. Everybody has been so willing to help and share their knowledge, and so a lot of it has been through like referrals and through connections and everything like that. And we've just invited the people onto our get to become guests on our podcast, and the people in this space are so willing to share, and they're just so willing to want to come on and just share what they've learned, and to help others learn along the way, including ourselves. And so we've just been so grateful in that aspect of things. So yeah, we've just been very, very, very fortunate on that side.
That's excellent. I think that's a very beautiful thing that you've been able to reach out to those people in the community. Right now, I've been pretty much minimalist and wanting to do one podcast a month, and now I've jumped to two podcasts a month. Now I'm at three podcasts, and even considering a fourth one. per month. It just happens that way because you start meeting great people and you want to talk to them and learn a little bit more about them. So here is let me see. There's something else. How are you unique? Because there are a lot of syndicators that are out here. You've got Michael Blanc, you've got Joe Fairless, and you mentioned earlier that all of them kind of have their own spin on certain things and how they do things or how they don't do things. So, for you and Selah, how are you all different from other syndicators?
So I think a lot of the syndicators in this space, we come from a place where we want to create value for other people. But I think one of the things that sets us apart a little bit more is, we're very family oriented, very family focused. And so what we do is, you know, we're wanting to create wealth. We want to create, these types of revenues and avenues for our family to be able to invest in, to be able to do something like this down the road and create like legacies for ourselves. And so we bring a really big family aspect um, to to the syndication space of things. And then, for us, it's our values. It's something that's super important to us. We're super close with our family. We want to share it with other people as well. And then just like the transparency as well. It's just, I think that where we're coming from is just a place of like transparency, integrity, and really strong family values.
Got it. So then that's very interesting. I heard transparency and integrity. Are those your two top values, if you will?
Absolutely. I think that in anything that you do, you want to just be, you want to be as transparent as possible. You want to portray as much honesty and integrity to the people that you're working with as well, because I think that it's just going to create that much more a solid relationship down the road. We're not into this to, do short-term types of things. We want to create long-term relationships with people. And by doing that, you got to have that integrity. You've got to have that transparency, because people want to work with people they know, like, and trust.
Right. And so, the idea of, because initially I thought it was, very transactional in this business, but you mentioned something that's really important is that there's this long-term aspect where you've done a deal before, but you want to do deals with these same people over and over again, especially if it was simple and if it was easy, everything was kind of in place. You had everything together. And again, they match your transparency and integrity values. I would say, in addition to that, transparency is one of my top values. If you go to my website, you'll see that that transparency. My personal website, jonathanmickles.com. But I would also add loyalty. It's another one. At some point in time. And when I talk about loyalty, that doesn't mean that you have to be in every deal that we have, and we're only going to be with these people because sometimes, you know, things don't work out where it makes sense to. Um, so sorry about that. We had it happens. It's life,
It
right?
happens. It
That's it.
happens.
But what I was saying is that not that everybody needs to be in the same deal over and over and over and over again. Things may happen such that the money that they may have had may have gone to another deal, and so they're not in that deal. But loyalty in the standpoint that the team that you've put together or the resources that you've used before, if they have been super helpful in making that deal happen, you want to keep them in anything else that you want to do. It's not like I'm just going to go and just always shop the cheapest. Making sure that you get something that's valuable, that's reasonable for whatever is fine, but definitely try to add loyalty. That's another thing that I'm considering adding onto my list of 4 values that I already have right now. So that's really good. So my last thing is that we actually have a segment called "Giving People the Boot," and that pretty much is helping people to get on to the next thing and to finally make whatever it happen. Whether or not that's investing passively, whether or not that's being active, or being a syndicator, whatever else the case is. What is it in terms of advice that you would give to someone, I guess, in this space to give them the boot, to give them the encouragement to move on to the next thing?
I think it's two things. One is getting and being in the right mindset. I think that that's super important to get started with anything, and it's going to propel you to do everything that you're going to be going on moving forward. So one, getting into the right mindset, and at the same time, you got to take action, and not just any type of action, but but really intentional action to move you to the next step. You don't want to just do anything in order to just stay busy, but you want to be very intentional with what you're doing, to be able to move forward and just focus on the next steps, in order to move you to your next goal.
How do you figure out whether or not you're busy or whether or not the action that you're doing is actually productive?
Yeah, that's a tough one, right? I mean, because you can spend like a whole day and you can be busy, but you haven't really taken and you haven't really moved yourself forward in the next step. So it's just really understanding your goal and what you're trying to achieve, and anything else that is kind of going to be noise in that way. You have to try to figure out, what's the most important, what's going to be the most impactful, that step that you're going to take for that day in order to move you forward. So it's just being very, very clear on what your intentions are, and what those actions are.
Interesting. Well, listen, Eileen, I thank you so much for your time and giving us a little bit more insight onto you and your organization, and how can people get in contact with you?
Sure. So they can always visit our website. If you go there, they can download one of our free apartment syndication passive investing checklists. And that's at our website, www.bonavestcapital.com. And if anytime anybody wants to have a chat or anything like that, I love talking real estate, podcasting, anything like that. They can always email me at Eileen@bonavestcapital.com.
Excellent. Well, listen, Eileen, thank you again for everything. And if there's anything that we can do to help you in your career, please let us know. All right.
Awesome. Thank you so much, Jonathan. I really appreciated this.
Same here.